I've got breaking news to share with you, and it's not good. Well, actually, it's good for us as people, bad for us as crypto investors. This news comes as a complete shock, as now the data has flipped, and, well, some of us are getting ready for the pain train.
About to drop the bomb, I'm the West Coast Don. Big fish in a small pond.
Oh, come on, man. Seriously, this is so weird. This is good news for us, but bad for the crypto market. VR Fanatic supports the channel. Thank you very much, sir. Says, I'm grateful for Klaus keeping us informed. Good, solid information that I unfortunately do not have the time to research. And without this channel, I would be taking time every day to read it. Now, what's going on in the market is not something anyone should be dealing with, just like people shouldn't be relying on pump and dump influencers. I believe this is the only genuine news channel that is 100% biased and factual. Look at Coach JV. He sold out and repeats himself nonstop. We could go on, and Klaus, we trust. Well, here's someone from the opposite side of the spectrum. XRP2K says USDT will get wrecked and Ripple will take over. It's coming. I said, no way. Ripple stablecoin passed USDT. Come on now. But there's hoping. He says, I believe it could with Ripple's openness and connections and independent audits. Now, what I like about this is XRP2K and I do not agree with this, but we are allowed to share this information with each other, and I don't ban you. So yeah, if it's a Hopium channel out there and you say something negative, you're probably going to get banned. Well, on this channel, both sides of people's viewpoints are allowed. Now, let's get into the heat map and let's talk about what news is good for us as people, but bad for us as crypto. And it's breaking because, again, think Trick is right. Bitcoin sitting at 68,150, ETH 3317. Yeah, I said it. Trick is right if you know what I'm talking about. Sol down 6 to 175, got close to 200. XRP sitting at 58.2. XLM just destroying it, melting. Faces, grown men are crying at 12.7 cents. Oh, crap. So here's the bad news that's good. The good news is this is messed up, man. And for real, this is Jerome Powell raising hands saying, fuck it, I'm done. This is, what the hell am I supposed to do right now? Job growth zoomed in March. Payrolls jumped by 303,000 and unemployment dropped. The unemployment rate edged lower to 3.8% as expected, even though the labor force participation moved to 62.7%. A broader measure that includes discouraged workers and those holding part-time positions for economic reasons held steady at 7.3. Listen to this. This is now earnings, okay? In the key average hourly earnings measures, wages rose 0.3% for the month and 4.1% from a year ago. Okay. So what is going on with this? And this is all employees total non-farm payroll. Essentially, you see that we are back above pre-Rona levels, right? Okay, so why is this bad? Why is this good? And how is this affecting the crypto market? And why is Jerome Powell saying, fuck it, I'm out? Well, it's pretty simple, actually. So you've got juicy job data, okay? Which means what, everyone? It means we have more money. And as I reported in here, it says, guess what? Wages are up 4.1% from a year ago. So if we have money and things are expensive, what does that mean? We can still afford things, which means producers can still raise prices even more, which means inflation can get even higher because we have the money as a workforce to, yes, participate and keep purchasing. So now here's the bad news. The bad news is this. 98.6% chance that on May 1st, the Fed is going to take a pause, with a 1.4% chance that the Fed is going to raise rates. Yes, you heard me correctly. Now, I know what you're saying. Bro, 1.4%, those aren't big odds. It's not the 1.4%. It's the delta in the data. Check this out. 1 month ago, there was zero expectation that we would be raising in a quarter. In fact, a month ago, there was a 20% chance that we would be lowering it a quarter. So the market was pricing in optimism. And I brought a story with you a few days ago that said, guess what? We're going to be pausing all year and the markets are going to adjust to that. Well, then that news broke and all of a sudden we saw what happened to prices. Now what's messed up though is this change. So now instead of pricing in a potential rate cut, we're now looking at this going, no, we're for sure holding and we may even raise rates. This flipped with this jobs report. So is it good that more people are employed? Yes. Is it good that more people are making more money? Yes. but it's bad because that means inflation can continue. So if inflation can continue, this guy right here that says, yo, fuck it, I'm out, is like, dude, we have to keep rates higher for longer. In fact, we might even have to raise rates to fight inflation, which would crush the crypto market, because the crypto market right now is pricing in a lot of optimism based on the fact that we're going to see a rate cut here either in the June contract or in the July contract. But now it looks even softer with some people out there thinking, you know what we're going to get? We're going to get an increase in rates. So this really all comes down to inflation and what it's costing us, and if we can survive the inflation. So if the economy looks strong, and I get it, some people out there are going to be like, bro, do you trust the data? It's not about trusting the data. It's about the data being there and what we do with it as a market. And the market, as soon as the jobs report came out, the market's like, girlfriend. Yeah, we might even start thinking about raising rates. We weren't even talking about raising rates here for the last several months. And that data that I shared with you from the CME group, they make money betting and playing on whether or not the Fed is going to raise, hold, or lower based on the contract dates. So these are people that know. So the people that know were like, yo, we're good. We're good. We're going to be cutting rates. And now they're like, we're for sure holding. And if not, we're going to raise it. Way this is bad, and the reason this is bad is because PPI, Producer Price Index, what the producers, right, that make our goods, their costs are going up. So if the producers' costs are going up, they're going to pass that on to the consumer, which means consumer costs are going up, which means inflation is going up. And with inflation going up and people making more money and more people being hired, that means supply and demand move with each other. That means they can keep charging us more and more and more because they know we're making more. Enough to the point now where you're actually seeing the people in the CME group, right, that make money on this action say, yeah, hold on tight, kiddos. We might actually be raising rates this year if this crap continues. Now, do I believe we're going to raise rates this year? I don't think so at all. But this further justifies my whole thesis that we're going to pause this year. And in fact, that was Trick's thesis. Trick has been saying this the whole time. You got to take note from people that have been around and people that are smart on this action, and Trick is one of them. Thank you, Trick, by the way. And that's the deal. We're looking at this going, all right, well, I guess we're pricing in now that the market is basically not going to see any rates, but now we have to worry about the market pricing in further inflation, further rises in CPI data along with PPI data. Like, this is not what I wanted to report on, but yet at the same time, I'm happy because I'm glad people are making more money. I'm glad that more people are finding jobs in the economy. But the more money we have in our pockets, the more money we can spend on highly inflated goods. And with greed being the dominant factor in this world, what are producers going to do if they know you have more money? They're going to charge you more, which means inflation is going to go up, and we're going to be paying even more for the things that we're already paying a shitload for right now. So it's good news for the economy, bad news for crypto. Not fun news, no matter how you slice it, because this is a crypto channel, right? Ugh. Either way, let me know what your thoughts are in the comments below. I'm a bit disturbed by this right now because the CME group has been fairly accurate, and it's not what I wanted to see this Friday morning.